going on, AMC stock family? In today's video, I'm very excited to be talking about this equity right here. We are already up 2.15% on the day. It is fluctuating, but that does not worry me. We knew it, everyone. We knew it. As soon as the volume increases, which is what we have been constantly saying, this stock goes up. We are already at $38 a share right now. Yes, I know this will not be concrete by the end of the day. I know it will continue to change. However, good news is here, and that is the volume has increased. It is very slight, and this is what makes me even more excited. The slight volume change, yes, just the 1%, 0% volume change, is still allowing this stock to go up almost 2% on the day, and actually it is already at 2%, but around that zone. And so if we go down, the group leadership has been constant, right? We are still above Roku, and so this is very important, and I want this to stick with us till the end. As long as we are above stocks like Roku, which by the way is about $400, or used to be $400 a share, now it is in the high $200 share range. So let's go ahead and check out Roku very quickly. I would just like to see where the price is at as we speak right now. Is it at 400, 300, or high 200? And it is actually at 324, so the middle. However, it used to be at the low $300 share range. It was at $293 just a few days ago. But keep in mind the volume, right? Volume 589,600, 25% down. And if we go back to AMC, let's go ahead and check out the volume. Let's see how much shares are being traded just on the day. And by the way, it has just been opened, right? The market just opened just a few hours ago, and we are at 14.8 million for the volume, right? These are how many shares are being traded. So this is what I was trying to talk about when we said we knew it, right? Volume is very, very important. So it's great that we were right on that aspect. Now, if we continue going down, I want to talk very quickly about the market cap because this will relate all to Citadel, right? Citadel and Melvin Capital, they used to be really crucial investors in determining how far the stock will go up or down, just because they do have substantial positions, or they did have substantial positions in AMC to the selling side, right? Because they were betting that AMC would go down in share price, and that is how they would make their capital back, right? Those are called short sellers. So the earnings per share due date is going to be on November 3rd of 2021. Very important because in the article I'm just about to read, they're going to be talking very negatively about AMC. But guys, do not let this negativity fool you. Honestly, it's going to seem very bad in the beginning, but you guys will understand that it's really not that scary and we do not need to worry because the earnings per share percent change since last quarter is at 87%. Which other company is giving this, right? I know I keep on repeating this throughout some of my videos, but really, what other company is going 87% up for the earnings per share since just last quarter? Now, if we continue, the sales percentage change since last quarter is also at 2,253%. Now, the market cap, here's where it gets very important, okay? 19 billion. And the investment bank Citigroup and percent that management owns is 1%. And not to mention the beta, negative 3.48. Very important because in the scenario that we do, or if we have a market crash, this beta will be the driving factor that allows AMC to flourish, whereas the other stocks that usually make up a large portion of the S&P 500, they will probably be down while AMC goes up in share price. And so over here, we do have the negative article, AMC Entertainment, dark days ahead for quarter 4 and beyond. Well, quarter 4, remember guys, that November date that I was just talking about. Well, let's see what's really going to be unfolding over here, and let's see what are the summary and key points that this author is trying to say for why AMC is going to be down for the rest of the year and why it is not a good stock to get. So the dearth of new releases coming to cinemas for the rest of 2021 and looking ahead to 2022 will be an obstacle to achieving profitability for exhibitors around the world. Okay, so profitability. And remember, I'm going to try to debunk as much as I can about all this. Right now, I'm holding two positions. One of them is AMC and the other is ticker symbol SHIB, the sheep coin. Now, this may be controversial to some, and some may even say that these are terrible investments. However, this is for diversification. Because remember, I was just talking about the beta. In the scenario that the market decides to pull back, I do want to have AMC and Shiba Inu coin because those two will probably be the equities and the cryptos that decide to go up, whereas the entire market goes down because of that beta that I was just talking about. And so with that being said, that's why I don't want to leave AMC or Shiba Inu coin out of the investment portfolio. That's why I think it's very important that at least for some diversification, in my opinion, I don't think there's anything wrong with getting both the equity and the cryptocurrency because I believe there's just simply too much opportunity to just leave this AMC stock and the Shiba Inu coin out of the investment portfolio. Now, because I see so much opportunity, we're going to continue to try to understand this article and why I don't think that this author is really understanding the movement behind AMC stock. So AMC price continues to be disconnected from business reality and prospects. Again, disconnected from business reality and prospects. A lot of investors, they think the exact way, and it's not their fault necessarily because AMC is just completely new. No one understands how the stock is still trading at almost $40 a share. So I understand this. However, again, the AMC stock movement is just extremely resilient, and there's really nothing that can be done about that. We beat Melvin Capital, and right now we're on the verge of trying to understand what Citadel is trying to do and possibly beat them as well. And so retail investors are banking on a short squeeze that already came and went back in June. Well, we already knew that there was a short squeeze back in June and in the beginning of January. However, we are not waiting for the first short squeeze. We knew that it already happened. We are waiting for a short squeeze 2.0 and the mother of all short squeezes to happen next. And so revenues in quarter 3 and quarter 4 have virtually no chance of helping AMC achieving profitability in 2021. Wait a minute, revenues in quarter 3 and quarter 4 have virtually no chance of helping AMC achieve profitability in 2021? Again, this is about the business model. This author is saying that there's a huge disconnect between AMC and the share price and how the business model does not relate to why the stock should be worth almost $40 a share. But to say that AMC has virtually no chance of achieving profitability in 2021, these are some very harsh sentiments. And so this is where the negativity comes in, and this is where there will be even more paper hands and more FUD, fear, uncertainty, and doubt. We cannot let that happen. And so even though this author may be right, we have to continue reading to see why he thinks that AMC will not reach profitability in 2021. We still need to understand that we already knew that AMC was never about the fundamentals in the beginning, although I have been saying that the fundamentals have been getting better. If the fundamentals have been getting better, I think that makes even less reason to start worrying about this equity, and that's why I don't think that there should be a lot of paper hands. But again, I cannot control your decisions, so if you would like to sell AMC stock for whatever reason, that is 100% up to you, but I'm just saying that I think there's too much opportunity, and so therefore I will continue to hold this stock until I think the opportunity had just completely gone away, which I don't think will be until a very while, because even if the stock is trading at $100 a share, we all knew what happened with ticker symbol GME GameStop. That one went absolutely parabolic as well. And so, with recent news announcements from major studios, 2022 and beyond look doubtful as well. The sentiment around this is just overall extremely negative, and so I'm sure we can all understand that from just those two key points. And so, instead of reading more of this, we're going to scroll all the way down and let's talk some numbers, right? Where have we been and where are we now? Well, as I discussed in my last article, AMC apes more hurt than help. Domestic box office revenues peaked way back in 2016. Despite flat revenues for years before, then CEO Gary Lopez made the questionable decision in 2014 to change out the seats in many theaters in their network with the new Lazy Boy recliner style seating. In doing so, he reduced theater capacities by 50 to 70%. The total cost of renovations was 600 million. Okay, so this is exactly the number game. So 600 million. So renovations, this was totaling up to 600 million. And so after a grace period tickets, prices were raised by $1 to $2, or just $1 to $2. So he thinks that this is an insignificant price raise. And other theater chains made similar theater seating redesigns. Did the investment improve results? Not even a little. Okay, this is actually very interesting. So the AMC revenue versus net income loss, so this is going to be June of 30th, 2021 in billions. So over here we see that the revenues have actually been increasing. 2019, we all know what happened during 2020. It was not AMC's fault whatsoever, or at least that is just my opinion. Everyone has their own opinion. But how could you blame the revenues for AMC going down, decreasing substantially when AMC had no control of what was going to happen during the year? And we see that the net income loss has increased as well substantially, right? And so then we go all the way back in 2021. And wait a minute, the net income loss has actually decreased back again substantially. So much improvement. This company really knows exactly how it can battle and how it can start winning in a lot of scenarios where it just isn't in the right market for them to win, isn't in the right position for them to win. And so, time after time, they have been showing their resiliency, not even just the AMC stock movement, but the AMC administration. Adam Aaron, he knows what he is doing. The revenue has been increasing again, not from last year necessarily, but again, the net income loss is really what was important throughout this graph. But I understand what this author is saying. And so in 2014 and 2015, he just starts to reiterate what this graph says. Net income actually decreased by more than 250 million each year. The reductions in capacity just could not be made up by ticket and concession price increases. And so this is not even the numbers that I'm really trying to talk about, okay? Because if we go all the way down, there was one other number as well that I wanted to talk about, because this dealt with $5.4 billion. And this is 5.2 billion, but it is right here, 5.4 billion. Okay, let's go ahead and read this paragraph, and then we'll start to recap everything, because again, this is very negative, but I'm going to start telling you right now, do not worry. Even if the price, let's say, goes to $30 a share tomorrow, I don't want any of you guys to be having a lot of fear, uncertainty, and doubt. Okay, so AMC recently announced to much social media fanfare that they had paid off $35 million in high interest debt. Again, okay, not too bad. Under normal circumstances, that might indeed be something to celebrate and see a bump in the stock price, which did happen for a few hours. Absolutely phenomenal. But for AMC, that represented paying off less than 1% of its massive 5.4 billion in corporate borrowings as of the last 10Q. And so this is what Citadel, remember, I was talking about Citadel in the beginning of the video. This is where Citadel comes into play. They see this number, 5.4 billion, as their debt, and they see only less than 1% of the debt being paid off, and that is represented through the 35 million in high interest debt. This is what really allows them to be interested in AMC and having their short position have that much more conviction. Conviction is the name of the game for a lot of these investors, especially for the hedge fund traders. So, representing 35 million out of the 5.4 billion, this is what is driving Citadel to be starting to sell even more shares of AMC. And you guys will understand that they are still selling shares of AMC. And so in the last earnings call in August, Mr. Aaron expressed optimism that AMC could be cash flow positive as soon as the fourth quarter if the domestic box office could hit 5.2 billion. So Adam Aaron said that AMC could be cash flow positive. I don't think many understand how just important and significant this is. Being cash flow positive, I could really see this allowing AMC go that much higher if all this starts to change. And so why does the domestic box office matter? If you look at the chart below, you can see a direct correlation between the domestic box office and AMC's domestic gross revenues. And so over here, here's the chart right here. But before we get into this, that was not the main point of the video. We were talking about this number right here, and this is why Citadel is using this as the driving factor to start selling more shares of AMC, but you should not worry. And over here, we have the manager, Ken Griffin, with the ownership of 1.80%. And again, this is going to conclude the video because this is talking about the institution Citadel Advisors. And what equity are we talking about? AMC Entertainment. Let's go over here and let's start to understand the selling position. As of August 16th of 2021, AMC Entertainment, the shares that they have sold just by one institution and one hedge fund, Citadel, is approximately 8.4 million shares. And remember, this was filed on August 16th. We do not know in the month of September, we do not know in the month of October how many shares were being sold or how many shares are being sold. And so the value percent change is 722%. This is how much more conviction. Remember the $5 billion I was just talking about, 5.4 billion? Well, this is how much more conviction is being added to their selling position. 722%, they increased their amount of shares that they were selling, right? Selling because these are put options. This just allows you to understand that Citadel is still selling AMC. And with that being said, though, I think that we should all understand why we invested in this stock. If we understand that the volume increases AMC's price, even if it's just a little bit of volume being added to the share price, it allows AMC to go that much higher even quicker. So that's why I think that Citadel right now is in a position where as long as the volume keeps on increasing, there's nothing that can be done to stop AMC. So keep that in mind. And so with that being said, AMC stock family, thanks again for watching, and I'll see you guys in the next video.